Every so often in the stock market, the fundamental rules of the game get completely rewritten. We saw it with the dawn of the internet, a force that unleashed unimaginable wealth and totally reshaped the economy. Well, it's happening again. Only this time, it's not just one wave of change, it's three massive currents converging at the exact same time. For years, investors got by with a playbook that relied on predictable economic cycles, Fed rate cuts, and quarterly earnings calls. That playbook is quickly becoming obsolete. The ground is shifting under our feet, and the strategies that felt safe for the last 20 years are being stress tested like never before. This isn't just another market dip or rally. We are at a historic turning point. In this video, we're breaking down the three tectonic shifts creating a new investing playbook for 2026 and beyond: the AI revolution, a new era of regulation, and crypto's deep integration into the financial system. We'll explore what these changes mean, why now, and most importantly, how to position yourself on the right side of history. This isn't about gaming the next quarter, it's about understanding the next decade. Pillar 1: the AI revolution, beyond the hype. First up, the big one: artificial intelligence. Now, I know what you're thinking. AI, we've been hearing about that for years, and you're not wrong. But what's different now is the sheer speed, scale, and cold, hard cash being poured into it. We've rocketed past the hype phase and are now in a full blown arms race for technological supremacy, backed by massive capital investment and real productivity gains. Since late 2022, AI has become the market's main engine. Just think about this. Some analyses suggest that a handful of AI-related stocks have been responsible for the lion's share of the S&P 500's returns, a huge portion of its earnings growth, and a staggering amount of capital spending. This isn't just one hot sector, it's a fundamental reweighting of the entire market, led by a few tech giants pouring unprecedented sums into building the infrastructure for this new age. But the real story for 2026 isn't just about the companies training AI models. The narrative is shifting from AI training to AI inference. Training is the phase we've been in, where companies like Nvidia saw explosive growth selling the shovels for the gold rush. Inference is where the gold actually gets found. This is the application phase, where AI gets put to work in the real world to generate revenue, slash costs, and invent things we haven't even dreamed of yet. Think of it like building the interstate highway system. The training phase was like manufacturing all the bulldozers and paving the roads, a massive, expensive undertaking. The inference phase is when trucks, cars, and commerce actually start using those highways, unlocking trillions in economic value. We're just now seeing the first cars get on the on-ramp. As we head toward 2026, the market will demand to see traffic. The focus is moving from companies that enable AI to companies that can actually use AI to make money. That's what will separate the winners from the losers. So what does this mean for our playbook? It means we have to start thinking like infrastructure investors. The first move was owning the chip makers. The next wave is about identifying the companies building the entire digital economy on top of that: the data centers, the cloud providers, and even the utility companies supplying the colossal amounts of power needed to run it all. Artificial intelligence is also changing the very tools we use to analyze the market. A human analyst can read a few reports. An AI can read thousands of them in seconds, spotting patterns no human ever could. This creates a challenge. How does a regular investor compete when the pros are armed with crystal balls that are faster and clearer than ours? The answer isn't to try and outtrade the machines. It's to understand the massive long-term trends they're chasing, because that's where the real sustainable growth is hiding. Pillar 2, the new rules of the game: regulation as a roadmap. The second pillar changing our world is regulation. Let's be honest, for most investors, that word is a buzzkill. It brings to mind red tape, headaches, and restricted growth. But in this new market, that's the wrong way to think about it. This isn't just a set of new restrictions, it's the official rule book for the next generation of finance. For years, all eyes were on the Federal Reserve. And while monetary policy will always be a big deal, the stage is getting more crowded. We're now in an era where government policy, geopolitical moves, and tech governance are becoming powerful market forces in their own right. The key is that while this makes the world feel more chaotic, some analysts argue it can also create a more predictable framework if you know how to read the signs. Take AI regulation. As AI weaves itself into the economy, governments are racing to put up guardrails. This isn't about killing innovation, it's about managing risk. The SEC is already signaling that black box algorithms won't fly. Companies that are transparent about how their AI works will build trust with regulators and investors, giving them a huge long term edge. Then there's the evolution of ESG, environmental, social, and governance investing. New rules are demanding proof, not just promises. Companies need a verifiable data trail to show they're compliant. For investors, this creates a clear roadmap. The companies that are already set up to track and report this data will face fewer risks and attract more institutional money. At the same time, there's a massive push for what's called operational resilience. New regulations in Europe and the US are forcing financial firms to prove they can withstand major cyber attacks and other disruptions. This focus on security is a powerful, non cyclical tailwind for the entire cybersecurity industry. The new playbook requires investors to think a bit like political analysts. It's about seeing regulations not as a barrier, but as a signpost pointing to the sectors and companies being primed for growth. The winners of the next decade won't just follow the money, they'll follow the rules. Pillar 3, crypto's integration, not isolation. The third and maybe most misunderstood pillar is the slow but steady integration of crypto and blockchain into traditional finance. For a decade, crypto was the Wild West, a speculative asset class in a world of its own. That era of isolation is ending. The story for 2026 and beyond isn't about crypto versus the world, it's about crypto joining the world. The biggest shift is the move from speculative coins to the tokenization of real-world assets, or RWAs. This is the idea of digitizing everything of value, stocks, bonds, real estate, you name it, and putting it on a blockchain. This could allow assets to be fractionalized, traded 24/7, and settled almost instantly. This isn't a sci-fi dream. Financial giants are actively piloting programs to move securities onto blockchain rails to cut costs and boost efficiency. At the same time, the role of stablecoins, digital dollars, is expanding far beyond crypto trading. Some businesses are finding them to be a fast and cheap way to send money across borders, acting as a growing alternative to the slow and expensive traditional banking system. As regulatory clarity improves, we could see them integrated into all sorts of financial products, turning the blockchain into a high-speed settlement layer for the real economy. This has big implications for how we invest. The classic 60-40 stock and bond portfolio is being seriously questioned after taking a beating in recent years, though many still see it as a valid starting point. But as we look ahead, alternative assets are becoming more important for building resilient portfolios. And crypto, once seen as a pure gamble, is now being looked at by some institutional investors as a small but important slice of their tech allocation. Less like a lottery ticket and more like a venture capital bet on future financial infrastructure. This whole shift is being supercharged by the launch of products like spot Bitcoin ETFs. That was just the beginning. The old crypto market, driven by retail hype, is giving way to a market influenced more by institutional strategy. This has led some analysts to question if the old predictable 4-year halving cycle is being replaced by a path of more gradual, sustained growth as the asset class matures. The playbook for crypto has changed. It's less about timing the next moonshot and more about understanding the technology. The strategy is to invest in the picks and shovels, the blockchains, protocols, and platforms that are building the bridges between the old financial world and the new one. The 2026 Investors Playbook. So, how do we pull this all together? The AI revolution, the new regulatory map, and crypto's integration into the mainstream. It's clear the old playbook is not just outdated, it could be dangerous. The 2026 Investors Playbook is about a new mindset. First, we have to shift from cyclical thinking to structural thinking. For decades, the game was about timing the economy, but these forces are structural. AI will advance whether we have a recession or not. Digital asset rules will keep being built. The strategy then is to invest in these long-term megatrends that will define the next decade. Second, the new playbook demands a focus on quality and infrastructure. With AI, look past the obvious names to the entire ecosystem enabling the transformation. With regulation, don't run from it. Clarity creates winners and compliant companies will be more resilient. With crypto, treat it as a small strategic bet on new financial plumbing, not a get-rich-quick scheme. Third, the old 60-40 model of diversification isn't the cure-all it used to be. True diversification today means thinking beyond just stocks and bonds. It may mean incorporating alternatives like private credit, infrastructure, and yes, a small strategic allocation to digital assets to build a more robust portfolio. We're living through a rare pivotal moment. The convergence of AI, new regulation, and blockchain integration isn't just another trend. It's a fundamental rewriting of the rules. The market of 2026 and beyond will reward those who understand these deep structural shifts and penalize those clinging to the past. We've covered the three pillars of this new world. Each force is powerful on its own. Together, they're shaping a new reality. Success in the coming years won't be about timing the market cycles, but about understanding its new structure. It demands a new mindset, a focus on long term themes, and a smarter way to build a portfolio for the future. The change is here. The only question is, are you ready for it? To keep tracking these shifts, make sure you subscribe and hit the bell. And I want to hear from you. Drop a comment below and let me know which of these three pillars, AI, regulation, or crypto integration, you think will have the biggest impact by 2026. Thanks for watching.